All right, we have Mr. Bismarck Rewane join us now to look at some of those issues around the commodities market and, of course, talking about inflation. Good morning, Mr. Rewane. Thank you very much. We're happy to have you this morning.
Good morning, sir.
Even with the rains, I'm sure it helped. Okay, yeah, you guys at FDC are projecting headline inflation of about 18.77% for April and food inflation rate in excess of 22%. Now, some would argue that inflation in Nigeria is structural. Others would say it's transient. And then some others would also say it's persistent. Which one is it?
All of the above. You see, when, first of all, let's get the numbers. We are saying it's 18.77 headline inflation. That is, if you had a basket of goods last year, and you compare it to the price of the basket of goods this year, then it will be 18.7% higher this year than last year. But interestingly, food inflation is actually 24% our projection. And core inflation, which is inflation less seasonalities, is up to 12.9%. What does this mean? When you look at the basket of goods you bought last year, and you look at Gari, at this time it was 6,000, today it's 16,000. Rice came as low as 14,000. Today it is 27,000, 100%. Beans, the same thing, 14 to 30,000. So everything before the pandemic is actually about 100% higher, right? But again, it's a basket, so there's some other commodities which did not increase that fast. But then talking about structural or persistent, and if things are persistent means it's happening over a long time and almost permanently. But the temporary issues, if temporary issues become temporary for such a long time, they become permanent. That's why I say all of the above. But more importantly is the fact that you have a situation where structural issues, where, for example, a bridge collapses or the production quotient actually is reduced, right, for some structural reasons. If you don't fix that structural problem, then the transient problems begin to become persistent. So,
like we have the issue of insecurity.
Insecurity. Now, when you talk about insecurity, some people causal effect relationship. Some people say insecurity causes inflation and some people say inflation makes people desperate and causes insecurity. So we really cannot argue which is what happens before or what happens after. In any case, both are undesirable circumstances and lead to undesirable outcomes because high inflation, high unemployment, loss of hope makes people desperate and a desperate man is a dangerous man. And that dangerous man is the man that is going around causing insecurity.
Coupled with wages not actually going up at the same time.
Well, wages are actually sinking. The truth is, and even this minimum wage of 30,000 naira, many states are going back on it and say we cannot pay it. So I saw Ekiti State Governor made a comment thinking of suspending the minimum wage. And that would be unfortunate because I think the resources are there to, if well managed, to make those minimum. Because minimum wage is $60 a month for Nigeria. And it is,
which is still quite
$15 an hour in the United States. So it tells you the story.
True. Well, with the year-on-year inflation at 18.77% and interest rates on the 90-day T-bills at 2.5% per annum, what do you think will happen to the level of national savings and what will be its impact on aggregate investment?
Well, the reality is that you do two things with your money. When you get your salary, you either save it or use it for consumption. So every time, but savings are a function of interest rates. So we call that the marginal propensity to save. If the interest rates are high, then you give up what you wanted to spend on and save it to get a return. But if interest rates are low, then you become oblivious to the interest rate and you spend more, and that causes inflation. So the thing to do is that if you look at all our African peers, you'll find that inflation in Nigeria is higher than the African average. It's about 18.7 if we say so. Whilst in Ghana, you talk about 10%, Kenya 5%, and South Africa 3%. In all of these countries, the interest rates are higher than the rate of inflation. Therefore, you have more or less macroeconomic stability. Here, you can't have a gap, negative rate of return of if the loss of my value, erosion of value is 18%, and what you are giving me is 2% for 90 days, and at best 9%, it doesn't make sense to save. And if everybody doesn't save, and they consume more, then it begins to stoke inflation. The thing about transient inflation, which could be because of this, becomes permanent, because for the past 35 or so months, right, we've seen inflation increase consistently. And it's going to taper off later on when certain things happen, which include releasing more foreign exchange to the market, getting manufacturers up, getting them going again. Then we will see output increase. And once the output increases, then you begin to see prices taper. I think that's important.
But what do you think is the best hedge right now against inflation?
The hedge against inflation is actually to invest in instruments which give you a return higher than the rate of inflation. Short of going into what Warren Buffett calls rat poison,
Bitcoin.
Yeah, so you have to invest in what we can call stable assets, stable alternative assets. And if not, the capital flight begins to ensue. People are moving because almost 25% of total deposits in Nigeria are in domiciliary accounts where you get 1% or less. Why are people investing in a domiciliary account to get 1% as against assets in Nigeria where you can get 9% or 2%, right? Because inflation in the United States is 2.6%, inflation in Nigeria is 18.7%. So it makes more sense. It's a no-brainer for me to convert my money into dollars and put it into a DOM account.
All right.
That's why we see that level of it.
All right. While inflation rate continues to gallop, of course, we have seen a couple of corporates that operate in the commodities market space, like Dangote and all that, release their first quarter results, which were quite impressive. What strikes you most of these results?
The important thing is that, like they say in the Bible, many are called, few are chosen. Many companies have released results, but the most striking happen to be Dangote, MTN, Lafarge, Nestle, and Unilever. When you look at the results, I take the perspective that if Dangote's revenue growth is 33%, which is what it is, and that sector is growing at about almost 9%, it means that Dangote is outperforming the sector, and the economy itself is growing at 0.11%. Dangote is performing 33 times better than the economy as a whole. MTN is performing, MTN's growth in revenue was 17%. MTN's revenue growth is 17%. The ICT sector was growing at about the same rate, right? So it's a reflection of that sector growth. But compared to the economy, MTN is growing at 0.11. When you look at Nestle, growing at 24%, so substantially higher than the economy. So what you do as an investor is to look at those companies that are outperforming the economy, outperforming their sectoral, and also positioned for the future. Because these results are Q1 results. And the Q1 GDP numbers are not out yet. But it's very important to understand this and see the context in which these companies are performing, especially when you look at the tax they have paid.
Well, talking about
Dangote pays, on behalf of its customers, pays 250 million naira a day in VAT, which is 91 billion naira a year. That's VAT alone. When you look at corporate taxes, it's significantly much higher.
About 40
billion naira a quarter. When you multiply by 4, that's about 160 billion naira.
So would you say it's commensurate with the whopping profits before tax of about 130 billion naira? Do you think, or rather, don't you think that perhaps Dangote Cement should pay more taxes?
No, there's only two things that are certain in life: death and taxes, right? So the reality is that there's a reward for investment. Where he has put in almost $17 billion, if I may, on refineries. The refineries are not generating revenue yet, so he's taking a risk. The reward for risk taken is profit, right? And therefore, if he had lost all this money, if he had made losses of 100 billion and had invested in Obajana billions of dollars many years ago, nobody will come and say, okay, why don't you let us share in the losses? So it's only fair to say that he has done that. But look at the tax he has paid. They have paid compared to taxes that the entire banking system is significantly less. And it's not just Dangote. Look at the tax that MTN is paid in this quarter, 30 billion naira, right? And look at the tax that Nestle has paid 6.6 billion naira. Look at the tax that Lafarge has paid 9 billion naira. So it's important that, first of all, people have to be profitable. First of all, they have to invest. Secondly, they have to be profitable. Thirdly, they have to pay taxes. Apart from taxes, they pay huge dividends. Huge dividends. So shareholders get dividends. They pay taxes, VAT, which, by the way, 85% of VAT goes to the states, who are claiming that they cannot pay minimum wage now, which is inaccurate. And then, on top of that, they pay corporate income taxes. And also, they invest in the future. MTN invests $2 billion a year in capex. Dangote is investing billions and billions of dollars for the future. And therefore, we must reward them and compensate them for the risk.
I remember the last time you came here, you talked about the tax to assets?
Yes, the swap, tax to asset swap.
Yes,
oh,
like
yes.
Right, yeah, quite frankly, Dangote had the road, right? So one is to pay tax. Two is to ensure that the tax is used properly for the impact on the people. Well, if you swap an asset for tax, you overcome that risk of the monies being diverted or leaking. If it goes to a government agency, we don't know what's going to happen. It could be swallowed by a snake in jam or something. Now, so what we are saying is that in this particular case, you can see the road. It eases traffic. It increases productivity. So that's the kind of thing that we like to see it actual value for money.
Absolutely. Now, with this inflation numbers galloping now, MPC meeting is later this month. What should we expect? Is it time for them to probably
tighten?
Hike?
Well, if you tighten and hike the MPR, it's a signal, right? The truth is that the signal is important, not just for us, Nigerians who are resident here, but those who have a stake in the Nigerian economy, like those who are going to lend us money in the Eurobond issue. If they see that you are playing ostrich and pretending, like we have done for so long, that interest rates don't matter in the resolution of an inflation trajectory or spiral, then you are rewriting the rules of economics. You must, whether we like it or not. I saw somebody saying today that status quo has become a ritual. But the reality is that there's a time to send a signal that, yes, we need to do this. And if you do that by just nominally increasing the interest MPR by 0.25%, it sends a signal to savers, to investors, to producers that it's time to change our tone, and that will have an effect of actually constraining inflation, and I think that's very important.
Yeah, like Brazil just did now, increasing their rates. Thank you very much, Mr. Rewane, for joining us on the program. We do appreciate your time.
Thank you for having me.
All right, after the break, we look at the insurance sector as Linkage Assurance unveils its rebranding strategies. Keep it here with us. This is Business Morning.